Hey everyone, this is Garrett Goggin with Golden Portfolio. Today we've got John Barker, CEO of Longcore Gold. Thank you for joining us today, John.
Garrett, thank you very much for the invitation.
No problem. I'm happy to get you on. Um, I became aware of your company a couple weeks ago, and I started doing some research on it, and the value was just absolutely compelling, and I had to learn more about the story. I look at your stock, it's trading at $53 million market cap. You have a Dumby, your main asset in the DRC. I model it at $1.5 billion value at 2,700 gold NAV. It's just, ridiculous. 283,000 ounces of gold per year at $975 all-in sustaining costs. It's basically almost a tier one asset right now, right?
Yeah, that's what we see. And, with the drilling that we've just started, we aim to be pushing through 5 million ounces of resource next year. And as you know, we already have the 3.66 of some of the highest grade gold you're going to see in West and East Africa.
Yeah, and you've been pretty clear about broadcasting that, your resource is currently 3.67 mil, and you're estimating another 1.5 mil coming from underground drilling, right? Now, the underground drilling, your resource has a grade of 2.3 grams a ton. The underground is at 5 grams a ton, if not more.
Yeah. Yeah. I mean, you can look at we say our neighbor, it's 220 Ks away, but it's our nearest mine. Kibali Gold Mine, it's a real cash cow for Barrick and sub $1,000 all-in cost, lowest of all of Barrick's mines last year. And we'll aim to be in the same sort of grade as they are. They're mining, I think, their pit about 1.6 and underground's about 5.1. So our certainly the early stages underground suggests we have similar deposit, but we need to drill more. And the resource that we've got in the pit, as you say, is significantly higher than that 1.6. So yeah, we were pretty excited about what we're finding.
Now, Kibali is obviously are there any other gold mines nearby in the DRC other than Kibali?
No, that's it. That's it. But the good thing for us is they've been doing it for over 10 years. Everything we need is sitting there. So from drilling companies to Toyota dealers to banks, they've done a fantastic job in what is the largest gold mine in Africa now.
Oh wow, yeah. Looking at I think production it's like $900 million of free cash flow. It's just extremely profitable operation. And Mark Bristow's a unique guy, right? Yeah.
Yeah, yeah, he
So,
is, and I mean they've obviously seen what we're doing. They know that the age of our deposit is the same. They've got the size on us for sure. They're sitting around 15 million ounce resource, but we really just started to scratch the surface on ours. So I think 5 million ounces is a good start for us next year, and then we've got 16 Ks there where gold has been mined either by Belgians or artisanals, or we've done grab samples. So we'd hope to be looking for more on structure, but as with many juniors, we just haven't had the resources to do that. So yeah, they're bigger, but we're certainly excited about what we got in our pockets currently.
why do you think Bristow's been so successful in the DRC?
Well, Randgold, he operated in Africa for many decades, so he knows what to say, when to say it. It's the same around the world. You just have to know the people, how to operate. You have to be patient, and you have to make sure that when you're doing your contracts, dot the I's, cross the T's. You have to really have belt and braces on the ground when you're doing everything. He's just a quality operator and knows how to do it in Africa. So, but for us, it's great that we can point to what he has achieved there. It just shows what you can do in our jurisdiction.
Yeah, no doubt. One of the things that he talks about a lot is taking care of all stakeholders equally. Whether it's the equity holders, the government of Mali, the employees there, the local community, and he must back up his words with action, right? Where everyone's happy with what they get from the mine.
Yeah, and if you look at what's happened in Kibale, he's talking, I think, about $5.3 billion he's put into both local, regional, and government coffers there, in various taxes. And with that, also the community's been uplifted, and the DRC is one of the poorest countries. Whilst there's a number of positive things, it still remains one of the poorest countries. And yet, if you look at the town that they've got there, as I mentioned, banks. schools, yeah, hospitals. These are all that are bringing great upliftment to the local community. And in addition, he's got 95% DRC employment on there as well. So upliftment, whichever direction. If you look at 6, 7, 8 times multiplier on the amount of people employed there, because of the wives or the husbands and the kids, it's a real upliftment for that community. So yeah, looking forward, that's just the sort of thing that we'd like to do.
Yeah, and the whole community, the whole development is because of the Kibali gold mine that Mark Bristow built. What's it like dealing with the DRC government?
Yeah, look, you have to be patient, but that's not unusual. As an analyst, I looked at Northwest Areas, I looked in South America, I looked in various places. You have to be patient, but mining's a patient game. But there are real positives as well. I mean, if you look at Standard& Poor's put a study out last year, I think it was, of time from finding a deposit to actually mining, and the DRC was the second quickest jurisdiction on 14 years, sort of half of North America. And if you look as well, we have a mining permit already for a Dumby. People sometimes you just gloss over that, but that's an important step. A lot of the other names in the space, the predictives, the montages, who are operating in West and East Africa, they still have to get through that. So we've jumped that hurdle, and again, that's credit to the relationship we have with the government. So yeah, you be patient, but you can really make strides as well.
Yeah, and the region seems to be heating up, right? With the Montage deal, with Wheaton Precious financing their all their capex, right? With that stream, it's going to bring more interest into that area.
Yeah, and I know when I've been doing my presentations the last few days, I've highlighted montage and predictive. And their resource is slightly bigger than ours, but as I say, we hope to have 5 million, so we'd be pretty close. And then, I mean, the difference is though, they've got reserves. They've got either a pre-feasibility or a feasibility, the two of them between them, and they're essentially on a different space now on that Lassonde curve. And you know the Lassonde curve as well as I. They're sitting now at the top in an interesting space, it suggests potential. I mean, if you're an analyst and you've done it as well, you sit there and you plug in the feasibility study. And if the company does well, it meets your expectations. But getting through to all those hurdles of actually building a mine, it's tough. So often there's disappointment. Whereas where are we? We're sitting at the bottom of that Lassonde curve, even though we've got arguably one of the highest quality gold projects there in grade. We've got grade conversion already because much as anything because of the grade. And we've got a 460-page preliminary economic assessment. So, yeah, they're trading a lot higher. I mean, Montage a year ago was about 80 million US. It's trading 620 mil. That's the value release you're getting, which is, I think, what you're echoing in your research piece there. So we think that we're towards the bottom of the Lassonde curve, but we shouldn't be right at the bottom of the Lassonde curve. We believe we should be creeping up much more aggressively than we are now, releasing value.
Now, one of the reasons why the undervaluation of the mines is you've been flying, the company's been flying under the radar. Started up during COVID. No major research analysts cover the stock,
Mm.
right?
Yeah, yeah, that's right. I mean, all the analysts seem to be sitting on their hands a little bit, not moving around much. And we've been small. We were small. 2000, we had 1.36 million ounces. Like no one was really looking at that. And then during COVID is when we saw our growth to the 3.66. We drilled through COVID. Wasn't an issue for us drilling. And then after that, whilst we raised equity, we really had to keep it conservative, like many other exploration groups. So haven't been on the road aggressively marketing in the last week and a half. We've been doing it and we've seen the benefits. The stock's up 20, 25%. And of course, your note, I think has contributed to that excitement as well. Because people realize just what you're saying. It's got a lot of ticks in the box for what you want. Quality, size, the closeology to something like Kibali or your neighbor like that jurisdiction, and it looks significantly cheaper than most of the peer groups. You know, so
Yeah,
people are really getting interested.
yeah, exactly. I see the same thing. What do you see? What are you working on over the next year or so? Main value drivers for Adumbia and Longcore.
Yeah, look, we're going with plan A, which is to drill underneath. So you'll be getting drill results out towards the end of this year in Q1 from Adumbia. And if they are anything like the ones we've seen, the deeper ones we've already hit at about 600 meters, then you're talking 5, 6, 7, 8 grams between 10 and 20 meters. So these will be stellar sort of holes if they're in line with what we've seen above. And of course, that's always a big if. Till you drill them, you don't know. But we have had some excellent grades. So that's the sort of holes that we're looking to intersect below Adumbi. And then following on with once we've done our 11,000 meters of drilling, middle of next year, we'd hope to come out with a sort of 5 million ounce resource figure. So that's the one thing. And then about 8 to 12 kilometers away, we're focusing on the areas called Imbo East. We've got a one drill rig there drilling down 200 to 300 meters. Areas that have been, we've done grab samples. And if you look at our presentation, you'll see 12, 24 grams, you name it. There's some very interesting grab samples. We just need to know a bit more. Geochem suggests there's some scale there. Artisanal work also reinforces it. We just keep putting holes. That's much, much quicker. Doing 200, 300 meters takes a couple of weeks to do. We've already announced on a couple of days ago our first news release that we had with one hole that had 1 meter at 64 grams a ton. We'll continue to keep popping holes in there and hopefully have more positive releases, creating this idea of a mining district instead of just the one deposit. Really looking to spread that out with other areas of significant interest. So that's our sort of plan A as we go for.
Yeah,
Yeah.
the VG on Imbo is pretty nice to look at, right?
Yeah, yeah, yeah. I wish it was sitting on my desk, but unfortunately, it's not. Yeah, yeah. There's some pretty impressive quality stuff, and it's interesting. From a very brief geological background, Adumbi is 900 meters, 140 meters. You've got these vertical banded ironstones, 4 to 5 of them. The fluids came in the past, hit the banded ironstone, and it was a physical barrier. So the gold tends to be pretty tight to the BIFs, and you get quite a bit of pyrite at that point too. As soon as the biffs disappear, and it can happen, within 2 kilometers of Adumbi, the biffs seem to disappear. Then you get quartz and VG, that's much more attractive for the artisanals than Adumbi. So fortunately, we don't really have much in the way of artisanal activity on Adumbi, but we have some other areas where, of course, artisanal. But that's what happens. That's what happens. The downside of having gold on your ground is you get the local geos in there pretty quickly.
Right, right, right. And then, I spoke to you before I started recording, right? I'm like, what are the negatives to, a dummy other than the DRC? And it didn't appear to be any, right? The recoveries are high, the ore is simple, the processing is simple. It's a very straightforward operation.
It looks like it. Of course, you always want to drill and drill and drill and just increase that certainty. So we will be doing that. In a If I had a plan B, it would be to drill the 200 or 300 meters as well as the five, going deep. I'd always want to do the surface and prove up reserves, and then you obviously look at geotech and just to look at a bit more metallurgy. But everything as it stands currently looks really really interesting. The big downside is yeah, you've got to be patient. You have to be patient in mining, no matter where you are. And I think the marketing you touched on, the fact is that we're really just coming out now from and telling our story. So when you don't have any cash, you really have to think where you're going to focus your spend. And we wanted to keep the people on the ground ready for like the drilling that we're doing now. We didn't want to search around for new geos who don't know the project and have to learn from scratch. So we kept our crew and paid them rather than paying for me to be marketing. It was just a choice.
Yeah, yeah, I love companies like that. You just sold one of your assets for what, 10 million, and you're using that, for exploration money versus, the constant dilution. You guys are, speak to me about the sh how many shares do you own and how much does management own?
Yeah, I've got about 750,000. I think the last look, and majority, I think I bought them all myself. So I keep purchasing whenever I can, which is not very often, unfortunately, because of restrictions. But the major shareholder is Arnie, just checking his figure, Arnie Kondrat, and he's owning just around 30 million shares. So I say he's the founder, put the company together over 13 years ago, operated in the DRC for 25 years. So he's the major shareholder. And then the other major shareholder, obviously, separate from us is Resolute Gold, the Australian gold producer. They have major projects in Mali, Syama, 300,000 ounce producer per annum.
Yeah, and the that mine and operator, Resolute Mining. They've had a good turnaround, right? Stock's trading for, it looks like, I don't know, $30, $40 per share. How many ounces of gold do they do a year?
Around 300,000 ounces. And
Yeah.
you're right, the last 2 years, I have to look at the chart, but in Aussie dollars, something like 17 cents to around 80. I think it's just off a little bit today, but around 80 cents. And for a producer, that's a real turnaround for them. They sorted out they had some financial issues. They sorted that out. They set on the operations and improved the cost structures. And of course, the gold price has helped as well. And now they've got the quarterly was a couple of days ago. We were mentioned in the quarterly. They've got 100, again, maybe out by 10 or 20 mil, but 150 mil cash, something like that. 145 debt facility they've just put in. So, and they've got some time to think now because their own operations are ticking over pretty well now. So, yeah, they're it's an interesting share holder.
Yeah, excellent. Yeah, the valuation is absolutely off the charts. Adombi's amazing and positive. It resembles Kabali, the great asset for Barrick. And then you've got Arnold Condrat, right? That you spoke about
Yeah.
before, that worked in the DRC for 20 years.
Yeah, yeah, yeah. So there's Arnie. We also have so Arnie's our executive chairman. We talk daily, and I mean, I've been in the company 4 years. There's no point me stepping into to try and replicate his experience in the DRC, but we have other people as well on the ground. In Kinshasa has been with Arnie for the similar time, 25 years, and then the guy who's really behind the uprise in the resources is Peter Cowley. He used to head up a company called Ashanti before it merged with Anglo Gold. He used to head up their geological sites, was involved in finding, actually, he's found over 30 million ounces in the same sort of jurisdiction and geology that we have with the banded ironstones. Over in Tanzania, he's involved in Tanzania, a mine called Gator, which is fantastic. It's the same sort of geology. It's just split by the Rift Valley. And we're on the other left-hand side of the Rift Valley. They're on the east side of the Rift Valley. So, yeah, he's overseeing but been involved in the DRC for a similar time as Arnie as well. So a lot of experience operating in the DRC.
Yeah, it's a great asset with great people. And then tell me about your story. Why did you get involved with the company?
Yeah, look, came back to the UK in 2019. I've been spending some time in South Africa. I'd worked for Freeland, done some other stuff, and I worked for Rob Freeland, as I say. I came back, and then a mutual friend who's here in London put me in touch with Arnie, and Arnie's saying, look, he'd like to just step over a little bit. So did I fancy being CEO? We'd known each other from the Banro days when I was an analyst at RBC. So I said, yeah, come. And I started out as in corporate development for the guys. And then after a year, we appointed the CEO. And yeah, I think like you, we sort of kicked the tires in lots of places, but this excites me as much as anything. And as much as anything, the sort of things you're talking about, we're at the bottom of the enterprise value per ounce curve, $12 an ounce. I mean, if you look at people like Endeavor, they say finding ounces for 25 bucks an ounce in the ground is a good number. And we've valued at $12 an ounce is bizarre, but quality ounces. So not just the MPV, but the dollar per ounce. And I think the grade as well. Just the flexibility you get with grade. You can your costs can get hit going forward. Whatever it is, there's always things that can go wrong in mining, and if it does, I'd rather have over 2 grams a ton than 0.7 grams a ton going through the plant. You don't need as many tons as well. You don't need as big a plant, so you don't need as much capex. Each way, it's just exciting on every levels, and the fact it's unknown is exciting as well because we can start having these conversations with people like yourself to assure you there's as we see it there's nothing there that's scaring us particularly on this project.
Yeah, and you've been relatively conservative with your resource estimates, it's an economic analysis that you put out, right?
Yeah,
You ran the economic analysis at what, 2.2
yeah,
grams per ton, and your resource grade's 2.5 grams per ton, right?
yeah. And the resource grade is higher because we have two pits that have that VG. You've seen the pictures of that VG, it seems. So yeah, so that just kicked the grade up, but Adombi looks like it's going to mine at 2.2. We've also been very conservative, for example, with the strip. I mean, it's a huge pit we've gone for down at almost just over 500 meters. Got to strip it over 10 to 1 because we assumed 45 degrees. We've had a number of people on the mining side down there that said, that's pretty conservative. You could probably go tighter, but we would rather be conservative. Again, look at the grouping. It's not people that have worked for fly-by-night junior companies. These like Peter, he's worked at the highest level with quality teams, and his reputation's on the line when he does this sort of stuff. And I'd like to think I'm the same. People believe me as an analyst because you said what you thought and you could back it up. So yeah, we've been conservative all around. When we did our PEA, yeah, there's inflation for sure since then. But I mean, the figures firstly are so robust that I think we're 5% of our NPV currently, our market cap. So you can put some inflation in. We still look great. I think that's the one thing. And then we put 20% contingencies throughout. We got quotes from the guys in Kibali on whatever it was, be it mining, construction, whatever, and then put 20%. So just, yeah, we've been conservative. Yeah,
Yeah.
definitely.
Yeah, it's smart. You set the bar low. It's setting easily achievable standards that you can, beat by executing well.
Yeah.
So yeah, is there anything else you want to share with us today?
No, again, just going to the flexibility of this. When we, well, I'm saying when, we aim to get 5 million ounces, and it'll be underground. So then we have more information what's happening underground. What maybe we will do, we're throwing it around currently, but there's a good chance we may well look at another PEA and maybe a smaller pit. We don't have the exact figures, but maybe we half the size, 150,000 ounces, go to a 5, 6 to 1. Again, I'm just in general terms, we haven't done the maths, but just conceptually, that sort of thing. We'll save $500 million on pre-strip if we go down that route. So the IRR will go crazy. I think the payback will be really swift, which probably people want to see in the DRC. And then we do a decline and mine from underground, which is, of course, what a lot of people do. So that's the flexibility we got to look at those things. But like I say,
CapEx,
it's great.
your
Yeah.
CapEx would be reduced by like 75% by doing a study.
It would significantly. Again, I'm not going to give you figures. I haven't done it, but it would be a significant
Yeah.
decrease in capex, which is yeah, it may well suit other parties. And I think another thing to realize too is we're not going to mine this. We've said it all along. We can find the ounces. We have done regularly, but there's just way too many hurdles to leap to get this thing into production. So we'll be looking for a partner to come along with us at some stage and carry us through the various hurdles to production.
Right. Yeah. New mono is 5%, right?
Yeah, but it's been going down and down and down. So it's they were involved 13 years ago in the early stages with us and helped to define some of the critical areas we've got. But then they sort of backed out of Africa. They made a strategic move out of Africa, and at the same time, they haven't been active on our ground for a similar period. So that's going
Yeah.
down.
The big majors, they get big. They don't want to take any risk. They're going to politically safe jurisdictions. Their costs are going through the roof. They just had horrible earnings, like a week ago, right? Um,
Yeah.
you need to take some risks in order to find those, virgin grounds with the high grade ounces that, so produce at low cost and generate, extreme profits.
Yeah, and let's look at the risk. Let's say you're a major, you're trading 150 dollars an ounce resource, and
Yeah.
we're trading at 13. Well, I'd hope you could justify that to your shareholders. I realize you wouldn't pay 13 for us, but it seems to me it's not the hardest sell when you see some of the things going on in some of the other countries in West and East Africa.
Right.
The DRC, you'll maybe seen that chart that I've got in our presentation. It's gone from 800,000 ounces of copper production to now being the second largest copper producer, arguably ahead of Peru, second to Chile. So dramatic increase, almost tripling of copper production, more than tripling of copper production. There's just some, and then that's because of Friedland in the south, and then you see what Kibali is doing in our jurisdiction. It just it's really heading in the right direction as some of the countries are maybe just faltering a little bit. So if you put that together and you put our valuation and you're trading at 120, 140, $150 an ounce, I don't know. It's not the hardest sell I would have thought for shareholders, but yeah, they must do what they want to do.
Yeah, makes sense to me. I see the undervalue.
Yeah,
Yeah,
yeah.
for me in the face. So I will end it here. Thank you very much,
Mm.
John, for joining me today. I appreciate it.
Garrett, it's a pleasure, and thanks again for starting covering us. I look forward to talking to you in the future.
All right, cool. We'll talk soon.